All right, everybody. It is Wednesday, a little bit after 9 p.m. Leon and I are coming to you today to talk to you about major news with Tesla. It's battery day. So, what does that mean for some of you all? Nothing. To others, you're like, oh, let's hear more about battery day. Regardless who's watching right now, this is one of those you want to share it. You want to take a moment to kind of let everybody settle in, get your popcorn, because it's going to be a good one. If you all aren't familiar with Tesla, they are juggernaut in the solar electric car industry. And so, with that being said, we actually did some digging. Leon found a lot of great information on Tesla, which we're going to go through today. While we are getting everything done for housekeeping, I'll let Leon tell you more about the topic today.
Yeah, so yesterday was a big day for Tesla. A lot of people don't know about this, and a lot of people probably don't care. But it was a big day for investors and a big day for the company. So yesterday was what they dubbed Battery Day. I mean, I don't know what that really means, but I think they got off. They're trying to play off of Amazon's Prime Day, and they called it Battery Day. So what Battery Day was. So as we know, as we most of us know, Tesla is an electronic vehicle maker. And their cars are beloved all over the world. They're finally wrapping up production where now they can actually meet real demand for the cars. They actually set a record, I believe, last quarter in the number of cars they delivered, and they have 4 quarters in a row of profitability. So Tesla's hitting on all cylinders. But one of the problems with Tesla and with anything that's electrical is power, right? It ultimately comes down to the battery. A lot of people don't buy electric cars because they feel like, if I want to make a cross-country trip, I can only go so far because there are no charging stations along the way. If you want to go from here to California, right now in a Tesla, it's not really feasible. But of course, in a gas-powered car, you can. So one of Tesla's biggest issues right now is the battery. And of course, they know that. I mean, they know that's kind of limiting their market right now because of that range of the battery. So they're really focusing hugely right now, putting a lot of money and effort into the battery technology. And yesterday in their battery day, they came out with a whole bunch of really, really good information on the battery, what's going on with the battery. And from my perspective, it was a game changer. What we're about to share with you. It to me, it's like everyone said, Tesla's overpriced. But what I saw yesterday, to me, justifies Tesla's high price because of the growth that potentially can come via their new battery technology. So, Brent, you can slide one.
Yeah, we're not going to that. One of the things you guys should know is I've been a huge proponent of Teslas for a while, and I too agree that it was overvalued. Like actually, probably if you talked to Elon Musk, he would have told you the same thing.
He said it. He said it like a few months ago. He said the stock was overvalued.
And so he constantly comes out and says that about the stock, which affects the price. And I think he's been sued about that. They said it was market manipulation on his part, and he won. He said he's just expressing his opinion. And so, today, some of the information you all hear, the reason why we say share it is because if you really start investing in Tesla like 5 years ago, anybody who invested in Tesla 5 years ago is probably up roughly 1,200% interest return on investment, right? That can't happen in the bank account. And as we really look at, how these companies are growing and what it means to us financially, Leon and I always talk about the wealth gap. This is one of those conversations that if you invest properly, you're going to help narrow that wealth gap. So that's kind of one of the reasons we're saying, share it. Really, if you have questions today, list your questions. We're happy to answer whatever we can. But just dig into this information. Let me pull up this slide. Give me one moment. All right.
And like I said, the reason this information is really powerful. You're going to actually see kind of towards the end where this is kind of going. Like Tesla, most of us know, like I said, know Tesla as an electronic vehicle company or an EV company, but they have a lot. What they're doing with their battery technology is going to take them to a whole nother kind of level and could take them another level in stratosphere. I almost look at now after what I saw yesterday. I look at the Tesla car, as almost like a test bed for the battery, right? So the car, in my mind, at least from what I saw yesterday, is is someplace they're just kind of testing out what can be with the battery. The battery is ultimately going to be one of their biggest products. The car will remain. I mean, you know, electronic cars is a new market, so it's going to be big. But there's no bigger market. Well, not to say there's no. One of the biggest markets in the world right now is renewable energy, and Tesla is slowly moving in that direction. So, all right. So here's the information. So here on slide one, and I'm not gonna get too wonky. Like they went crazy deep into the technology and the stuff, the minerals, stuff that go into the battery. I kind of pulled out what I thought would be kind of easy to digest and still get the information across. So first point is that, so just we'll go back to Battery Day. Battery Day is covering what they're doing with the battery technology, and what they're doing to move that technology forward. So first bullet point is saying Tesla has acquired the rights to a 10,000 acre lithium clay deposit in Nevada. The reason that's big, right, is because right now, so I mean, a lot of us don't know. I didn't even know this, but inside batteries, they're typically, some of them are called lithium batteries, and inside the battery, the main product is lithium, right? And so before, Tesla had to buy that lithium from another company and then have it shipped to them, which are both costs. So they had to buy it one and then have it shipped, with another cost. By them acquiring this 10,000 acre facility, they're essentially cutting that cost, not cutting it out, but they're cutting that cost dramatically, because now that lithium is going to be on site, essentially at their headquarters, and they basically have their own mine now. They can mine lithium on their own. So they're cutting out one of the huge costs there. Second, Tesla is building its own battery cell manufacturing facility. And this is huge. And yesterday they went into the whole wonkiness and geekiness about how it's going to work, but they're actually reinventing the battery, right? So the way lithium batteries work right now is not the way the Tesla batteries want to work. They have all types of new technology and new components. I mean, it's almost a whole new battery that's really gonna almost double the power and reduce the size and add to the range of the battery. I mean, it was a huge display they put on about the engineering going to this battery.
Leon,
So now,
real quick, let me ask. We often have talked about Tesla, and really, let's not call it Tesla. Let's talk about Elon Musk. We've oftentimes talked about Elon Musk's ingenuity in reinventing the way he does business, his products. And my question is, in this space that we've discussed Tesla, we often talk, I've particularly often been a huge proponent of how Solar City got rolled into Tesla, right? And then SpaceX, we kept saying that there's going to be a drip down effect from all the advancements that's happening with SpaceX inside of Tesla. Did they touch on that in the what you were watching?
No. This was 100% the focus on the battery and the manufacturing of the battery for the Tesla car. Now they didn't touch SpaceX.
Okay.
So SpaceX, and I mean, again, that's another one of his companies. But okay, so bullet point 2 is now that Tesla is going to be building their own battery cell. So the battery is made up of 2 components. One, the cell, and the other portion of the battery is where they take the cell, put it inside this pack, and then attach it to the vehicle, right? So right now, the battery cell, the one they currently have, is made by Panasonic. And some of you may have heard this big thing about the Tesla Gigafactory that they built out in Nevada. So right now, Panasonic inside the Gigafactory makes the cell, and then they assemble that cell with the battery pack and make the battery that goes into the car. Well, of course, they're outsourcing that manufacturing of the cell to Panasonic, which again is another cost. So now they're building another factory that's gonna be exclusively for building the actual cell, which again is the main power source of the battery. They're gonna be doing it on their own. So again, they're cutting out another layer of costs, moving aside Panasonic and gonna build that in-house. And again, another thing about this, which is key, is that they're gonna engineer this facility to the point where it's gonna be a lot smaller than any current battery manufacturing facility, which is great because it's going to be a smaller size but have higher production. So again, that goes right to Tesla's bottom line, because they're getting rid of Panasonic at some point, not immediately. They're going to get rid of that third party, and they're shrinking the size of the facility. So there are two huge costs that they're cutting out on the manufacturing side. And point 3 is recycling. So they're about to implement or do a pilot test on a new, basically, battery recycling facility in Nevada as well. So old batteries that are in current Teslas that either go bad or run out or whatever can now be recycled and then turned into new batteries. So again, another cost saving. There's no reason now to go build out as many new batteries because you're now be recycling old ones. So these are three major, and like I said, these are very, very high level. I mean, they went way deep into all this, but these are basically the main, the things that will matter to us as investors is the cost savings. So these 3 points show huge costs that Tesla's going to realize based on the first, the kind of the main portion of battery day, which we're talking about cutting out costs of the battery. Now slide 2 is going to show, okay, what's now the real quick. Oh, that's slide 2. So now we're saying, okay, they did all that. Now what are the benefits of what they did? So here they are. So on first bullet is because of all the stuff they're doing in there, having the mining the stuff themselves, reducing the factory sizing, building the battery themselves in house, they're not going to have a 56% reduction in the cost of the battery. So they're cutting the price of the battery more than in half. Now, right now, right below it says the average EV or electronic vehicle battery in the US is about $11,000. They're on target to cut that below $6,000. So they're going to cut it more than in half. So that's a huge savings, which again relates back to what they're doing on the factory side and the mining side, where now they can cut the battery price more than in half. And below that is the point that everyone really gets to, is the range of the battery. So what they're doing now is with all that they're doing on the manufacturing side, the range of the battery is going to increase by 54%. So right now, the longest range or distance a Tesla battery can go is 370 miles. After this new process in place, it's going to increase to 570 miles. So we're looking at almost 600 miles, 570. They say 570 to 600 miles. Between 570 and 600 miles increase on the new battery. So 54% increase on the range of the battery. Again, that's huge, because the biggest thing right now that worries people is you buy a Tesla, you want to travel here to Michigan or Texas. Can the car make it? Well, they're bumping up against, they're pushing the higher end of the hundreds, getting near almost $1,000 on 1,000 miles on one charge. So 56% reduction in cost, 54% increase in range, huge. Now, having said all that, what's the point, right? So the third point is really what it gets down to, is the cost to us, the consumer. So with everything that they're doing now, Elon Musk said in 3 years, they're targeting 3 years, that they want to be able to produce a fully electronic vehicle and a fully autonomous vehicle. Now, autonomous means it's self-driving. A fully electric vehicle and a self-driving vehicle for $25,000. That's below the average cost of vehicles in this country right now. The average cost of an electronic vehicle, well, at least a Tesla, is anywhere from $50,000 to $100,000. So on the low end, $50,000, they're going to cut the cost of a Tesla in half, down to $25,000, and it's going to be fully self-driving. It's going to have increased range, 54% increased range. The battery is going to be reduced by 56%, the cost of the battery. So these are huge things for Tesla going forward. Now, the last bullet point is really the for me, what I took home is like, okay, this is what they're really aiming for, right? So Tesla is really, so what they're really doing is, like I said earlier, to me, the battery in the car is really just an experiment for what the battery can be, right? So the battery, what they're really aiming for, they want the battery to be in everything, right? So they want the battery to be in plants, in for electrical companies to use to store energy, for us to have in our homes. Like the battery, they want the battery eventually maybe be in our cell phones. They want this Tesla battery to be everywhere. And once they perfect this battery, they're going to move into the $1 trillion renewable energy space. $1 trillion. Right now, the EV space, or electronic vehicle space, is 160 billion. And they're saying like the next 5 years, you could push 300 billion, maybe more. That's just for electric cars, which they're going to remain in. That's their bread and butter right now. But with this battery now, that can then be opened up to any industry, not just cars, but anything that has electricity, needs to store power, the Tesla battery will be able to use for. So this is what I was saying earlier. And I said, for me, slowly moving into a $1 trillion market, to me, justifies Tesla's high valuation, because at some point, if all goes well, it may not, we don't know. I'm just saying, in the future, the possibilities that they can move into $1 trillion market, which then, in my mind, justifies the high price, because nothing's free. You have to pay for that kind of growth. So these are the main bullet points from the battery day yesterday. And Brett, if you go slide that slide, which is slide 3. Yes, here are the key takeaways. So first one is Tesla's bringing the battery production in-house to cut production costs and increase efficiency. So that's kind of what it showed us, how they're reducing the cost of the battery. Second one saying Tesla's cutting the cost of the battery by more than 50%. Again, that cuts the price of the car. I mean, the whole point of this, they want to get the car down to about $25,000 in about 3 years. And the one that really matters to us as consumers is the range. They're increasing the range over 50%, which is huge. Like we just saw in the last slide, the value of that. And then the bottom one, the long-term thing they really announced yesterday in so many words is that they're really moving into the renewable energy space by having this battery that they're really perfecting. And like I said, it's going to take about 3 years for this to really to happen, 3 to 5 years. But once they get this done, this then can be used for any industry, not just cars. So Tesla now, in the next 3 to 5 years, is also going to be playing in the renewable energy space, which is a $1 trillion market. So, so anyway, I just want to bring that to everyone's attention. So, when after seeing this, once you think about Tesla, just know that Tesla is not just a car company. It's not just an EV company. They're actually moving into being a renewables energy company. Which is a $1 trillion market. So Tesla has potentially, nothing's guaranteed, potentially huge growth over the next 10 years.
Yeah, and another piece too, for anybody who's really interested in what Tesla's doing with the batteries in the houses. Tesla just came out with the app for anybody that owns solar panels on their home. The app allows you to sell energy directly back to the energy companies through your app. And Tesla always had this functionality, so it's not most electric companies where you get solar panels put on your house, you can sell it back to the grid, but no one is taking it to a place where you're just picking up an app and you can actually start storing the energy to send back to the electric company. Before, it was either you use it or you lose it, and that was the big thing with Tesla was trying to figure out a way to store energy in an efficient manner, because anybody, again, who has solar panel knows you can't get a solar-based or a cell-based generator. It's all like normally gas powered, or you have to plug in. And so with all of this happening with their battery, that's just going to add to their capacity, which means it's going to add to homeowners and solar panel people with solar panels being able to collect more energy and sell more of it back to the grid, which is going to increase revenue to individual families who own these panels, which is going to increase sales, not cells, sales of their solar panels throughout. I don't know what their consumer base is. And I'm still a proponent of when SpaceX finally, like when they get everything done with SpaceX, Tesla's just getting all this valuable data from spaceflight. And they're just putting it in their cars, similar to the energy. The energy, if you really look at Tesla, they start off with Solar City as just testing. As soon as Solar City worked, they rolled it into Tesla. And now with this battery, I can see everything Leon's talking about. And this doesn't even touch on the fact that they're producing a line of 18-wheelers that are going to run off of this technology, and some autonomous drivers that will be doing deliveries from like the Amazons well, it depends. But they're working on deals to actually have these 18-wheelers delivering packages that are normally self-driven 18-wheelers throughout the United States. And I want to say they got early approval for testing it in like 2023. So there's a lot of really good stuff coming from Tesla.
Yeah, the home. So I heard a couple of years ago about the Tesla battery in the home, and I don't think it was really ready at the time. And I don't even think now if you buy. I mean, I know you said you checked in this out. You checked in the solar. I don't know if right now you can even buy. I don't know if you have solar in your home. Can you? I don't know if you can currently store the energy. You can't. Right. Okay. Yeah, you can't. And so that's another thing with this Tesla battery is that it's eventually going to be a consumer thing as well. So you'll be able to buy a Tesla battery for your home and actually store your own energy. And if you want to, you can sell it back, or you can save it over yourself. It depends on what you want to do. But you'll be able to store energy, whereas right now you can't. You can't. The energy just kind of runs in your house and then runs back to the grid. This way, you actually be able to store it on your own. So I mean,
that's gonna be a game changer. There's so many homeowners right now who have panels and they're frustrated because it's either use it or lose it, and some of them don't sell it back to the grid, which I don't know why, but they don't.
Right. Yeah. I mean, it's gonna be huge. So Battery Day showed what it showed me and bringing to you all is that Tesla is and this and putting a lot of money into this. Tesla's investing billions into these factories to build this battery to really, and like I said, the battery has, I don't want to say some new physics that's going too far, but they have some things that have never been done before in battery storage. They've been working on this for the past 2 or 3 years with companies, with actually scientists over in Europe and here in Asia. So it's been a few years coming, but there's some new technology, some new science into this battery. So it was big news. And going forward, like I said, we'll see some big changes for Tesla over the next 3 to 5 years. Like I said, Musk said they're looking to get the price of Tesla down to $25,000 in 3 years. Now he's made promises before on the price of vehicles, hasn't always hit them. But as he kind of put out yesterday, one of the biggest problems was the battery. Like the battery right now costs, like you saw, about $11,000. They're going to get that down. They're looking to get it down under $6,000. So once that happens, you then be able to see a serious drop in the price of the cars.
Yeah, and going back to just Elon Musk as a whole, even when he doesn't get it done, it happens a different way. And sometimes, what he sets out, like, we're going to build a flamethrower. It's just
Right.
It's for the moment, but that technology, it makes it somewhere. And
Mhm.
so that's what I've always loved about Tesla personally, is just the fact that he seems to always find a place for innovation to occur. So I'm happy to hear. And actually, a lot of what Leon talked about today was new information for me. So it was really cool to hear it. Now, for many of you all, again, we're talking about a company that if you bought into Tesla, for everybody who's watching now, you're probably looking at being somewhere north of 1,000% return on your investment if you bought it simply 5 years ago. So if this technology takes them to a level that puts them square in the front, I mean, EV technology in China is like an emerging market right there. And right now it's a blaze. Like everybody's trying to figure out what to do with the batteries. And that's it. Everybody's talking about the batteries for the EV market. So yeah, I'm really excited to see where this goes. And for those of you all who've been thinking about, Tesla, the stock price, I think Tesla's down $80 a share today or something.
Mm.
That's normal for Tesla right now. And since the split, it's had swings of 50, 60, $70 per day. And what we fail to realize is that, again, we should be looking at the percentages Leon just kind of pointed out versus the dollar swing. Also, look at the normal behavior of companies. If it's normal for Tesla, but not normal for the market, you have to remember that. And I've gotten calls, people who are panicked, like, oh my gosh, it swung so much. What do I do? The future is going to be rich for this company. And that's my prediction. I would hold steady and just wait it out. I'll buy more really on the dips. But that goes back to dollar cost averaging. And if any of you all are Investment Education Academy members, go back to the video Leon and I did on Tesla and listen to the part about dollar cost averaging down. It's going to be applicable right now. So listen to it, put that strategy in action. It's going to work out very well for you. So
Yeah, like you said, the number that keeps jumping out to me is $1 trillion, which is the size of the renewable energy market. Not saying Tesla's going to get
that's right now. So by
yeah,
the time it hits the market,
right now. Yeah. I think like 3 years ago it was around 700-800 billion, and now it's over $1 trillion. So in the next 5 years it could be 1.5-2 trillion. Who knows? And like I said, not saying Tesla's going to get all that. No, they're in the EV market, which right now is 160 billion. Another 3 to 5 years, it should be around 300 billion. They're going to remain in that, but also play in the larger renewables energies market. So, sky's the limit for Tesla right now. Like, as you said, nothing's guaranteed. Tesla could fail tomorrow. We have no idea, but it's just information for you to process and to adjust accordingly. But I'm a fan. After what I learned yesterday, I am more bullish on Tesla than I was before. And to me, the price, which is high, is a little more justified in my mind now because I know kind of where they're going with the company.
Yeah, and for those of you all who follow our picks, do you know what Tesla's up since we picked it?
Yeah, it was like 60-70% at its peak. It's down now because it's dropped, but I think it was pushing like 100%, but it was 60-70%.
So for anybody who was with us when we originally picked Tesla, if you chose it, again, it's not an endorsement of ours, but it's facts. If you would have chose it when we picked it, you're looking at probably having somewhere north of 40% return on your investment. Again, I love doing this to give you what that means from a banking standpoint. That's 40 years or more of interest that it would take you to get. Actually, it's way, you never would get it. You would never get it. But if you were getting 1% per year, then you have to wait 40 years to get what has happened in the last 5 months.
Right.
And
Yep.
this is why we say if you have a savings account, and we don't say it to really hurt anybody's feelings, you're dying a slow death financially. It's it's not even keeping pace with inflation at this point. The real inflation, the real inflation. And
Was that, yeah,
so
yeah. Inflation is usually 2 to 3%. This year, really, inflation is like 8 to 10%. With the amount of groceries have gone up. Alcohol sales. I mean, alcohol prices have gone up because everyone's drinking now.
yeah,
I mean, yeah, it's just, yeah. I mean, you're like Brent said, you're dying a slow death. It's death by a thousand
financially,
cuts. Huh?
financially.
What I say? But yeah, sorry, financial. Yeah, yeah, dying slow financial death. Yeah, sorry. But yeah, you're not keeping up anywhere near with inflation. So as Brent said, if you bought Tesla when we had picked it, you made 50, 60, 70% of your money, which would have taken you 50, 60 years to make that in the bank. So just, we always like to point it out that banks, savings accounts are not where your invested money should go. We get the point about, having that safety net, I get that. But, for us to close this wealth and ROI gap, we got to have our money in, things like the market, real estate, and entrepreneurship.
Yeah, and looking at what the oh wow, okay, so I just looked it up. Since we picked Tesla, we were close, but we were discounting ourselves a little bit.
Yeah.
It is up 88.56%
Right now?
right now with everything that's been happening since
Okay. Okay.
88 point. That's almost 100% rate. Well, no, it's almost 90% rate of return. Let me not skip the 90. But this does not happen in a bank account, people. And this is what we're kind of. This is why we really pour into these conversations, and we want you all to look at it from a stance of what does it really mean for your money. And this is we picked this. It was in April, May. It was actually a May pick.
A few months ago.
So
Okay.
May. Imagine getting 80% of your money since May.
Mm-hmm.
That seems kind of awesome to me. But not every stock does that. It's not guaranteed to do that in the future. We are not saying that there's any guarantee whatsoever related to what they're going to do in the future. We're simply saying the opportunity is very rich that it will continue to go up. There will be bumps, but we're in an election year. It's always bumps going into an election. It's just the nature of the market. No matter who wins, the market normally corrects in late November. So profit taking might help happen in December, and then you'll see the market kind of get to its new normal in February, late January, mid January. All right. With that being said, we owe you all some stock picks now, so we can talk about what they're doing later on. So, Leon, you want me to start? You want to start?
Nah, I'm curious what your pick is. Yeah, you good.
I mean, all right. So, I'm reluctantly picking Nike right now. Let me tell you all why I'm reluctantly picking Nike. I didn't properly plan. And so Nike's a stock I've been watching. I like the company. I'll show you the 5-year chart. My only reluctance in picking them is the fact that they're up 10% today, and they're almost guaranteed to have a pullback tomorrow. So that's gonna hurt my numbers, and I just don't want it to hurt my numbers. But I like Nike. They pay a dividend. The company continues to prove themselves as a leader in the industry, right? Like it was at one point in time when Under Armour came and hit hard. Like everybody was like, "Oh, Under Armour is going to be the next big thing." They're doing no, they're not. And since if you're in, and this is true facts, if you're an Investing Education Academy member and you participated on that phone call with Roderick Williams and you understand how the secondary shoe market works, I really want to get a company that is positioned to benefit from what's happening in the secondary shoe market. And Nike is one of the top contenders for what's happening in the secondary market for shoe sales. So that's why I'm picking Nike. I think as technology becomes more familiar to everybody, looking at alternative and also the wealth gap, you got to think right now, what are the things that allow us to narrow the wealth gap? And the shoe market is going to be one of those gap narrowers. So I am picking Nike. It's been a strong presence in the American market for 50 plus years. And the ticker symbol for Nike is NKE. Again, NKE. And I'm gonna be honest, I just like what Nike's doing with voicing themselves in regards to Black rights and showing that they're going to stand in solidarity and try to do what they can to improve themselves so they can have a better Black representation in their company.
All right. So my pick is a company called Exponent. Ticker symbol is XPOE, or the word Expo is their ticker symbol. Today they closed at $71.40. They were
Hold up.
down
What is it? XPOE?
No, XPO. Sorry, XPO. My bad. If I said the ticker symbol is X. Sorry. Sorry. The ticker symbol is EXPO. Expo.
Okay. All right, cool.
That was my bad. So again, the company's name is Exponent. Ticker symbol is EXPO. They provide engineering, science, and health consulting services to corporations and the government. Right now with COVID, they're doing a lot of work. So they did, like I said, they offer health consulting. So they're doing a lot of work with companies and the government with regarding to COVID. And their 2-year profit growth is about 8%, and their 2-year sales growth is about 6%. And they pay a 1.1% dividend. So, it's below my target of 2, but I'm not buying this, not picking this as a dividend play. That's just kind of icing on the cake, but it's more the market they serve and their strong and consistent growth in sales and profits.
Yeah.
So Exponent.
All right. So last week, Leon picked Atlantis.
Atlassian.
Yes, what he said. And it was really cool. I was in a business meeting today, and one of the people were like, "Yeah, because I've invested in that company." And I was like, "Why does it sound so familiar?" So,
What? Oh, they said Atlassian.
yeah.
Uh,
It turns out that that was the company that you mentioned last week. I was like, "Wow, okay, that's pretty cool." And so
yeah.
we hope many of you who listen to our podcast, who watch us on these Facebook lives, um, you're having these conversations with people, and now a normal part of your day is talking about investments. We don't suggest that just because we said it, you go out and buy this every single time. That just wouldn't make sense for everybody's portfolio. These are just stocks Leon and I have been watching. We think they're good to mention, but always do your research. Always take a look to see if it makes sense for your risk tolerance, if it makes sense for your suitability, and financially if you can invest. Also remember, if any of the stocks we named, because I picked some that were in 1,000 plus, you can always buy fractional shares. And really, truly, a stock split is nothing but fractional shares. But please don't get me on that.
Yeah. Not go down that road again.
Yeah, we're not gonna go down that road. But just know fractional shares are always an option. And to answer the question that came in, can you set up, not buy, can you set up a brokerage account just to get fractional shares when you already have a brokerage account that maybe does not offer fractional shares? The answer is yes. You can have more than one brokerage account, and most of them today don't have any type of fees in regards to inact. Some do. Most do not have inactivity fees nor balances that you have to keep in the account. So just make sure when you get the accounts, wherever you get them from, you check the account to make sure there are no fees associated if you aren't doing a certain volume of trading. And you also, in my mind, want to get a brokerage account that has commission-free trades. So those are some things to think about. Again, if you're an IEA member, just go to IEAmembers.com and post the account that you're getting if you want us to do a little bit of research and check it out for you. We do that for, when we can. And if we don't do it, more than likely one of the members has opened an account there or researched it and can help you out. Let's see.
So just real quick on that. So the ones that I know of, that the big companies that offer fractional shares are Fidelity and Interactive Brokers. The other big ones that I know about, TD, E-Trade, that's really it now because everyone's merged. Those two do not. But the ones that do offer that are small are Robinhood and Cash App that do offer fractional shares. So out of that list, Robinhood, Cash App, Fidelity, and Interactive Brokers offer fractional shares.
Yeah, and Cash App, for some of you all who are thinking, I don't know too much about them. They're owned by Square. And with that being said, they're backed by a pretty big company, so they're not just this random app, which I thought they were until I did the research. And so there is it Square, Leon, or PayPal?
No, Square. Square
It's,
owns Cash App.
so Square owns them, so they definitely have the financial backing to be here for the long run. And
Square was one of your picks, one of our picks. I don't know, a few months ago. So Square is a public company. We picked Square a few weeks ago. So Square is a big legit tech company.
okay, so two things came up from the questions. Bianca said it's a JIRA is a flagship product. I think of
Yeah, Jira. Yeah, I use that. So I use Jira when I worked at Accenture years back. I was in content management. We use Jira. So and Jira is owned by Atlassian.
yeah, and that's what she said.
Yeah.
Yep. By Atlassian.
Mm-hmm.
And Marcus said SPI went crazy today. Is that a solid company to invest in or just market hype?
What's the ticker symbol?
SPI. I'm gonna look it up real quick. Let's check. All right.
Energy. Ooh, it's an energy company.
Oh yes. Okay, so let's see what the market cap is. Oh yeah, they're only trading 207 million shares. That's not a lot. That's not a lot. Well, it is.
Wait, they're 200. How many you said?
Yeah, 207 million. It is. So they're $14 a share, and they went up 1,000.
No, their market cap is 207.
Oh, let me see. What is the volume?
The volume.
I'm looking for the volume.
Is so a Marcus, that's what's called a
pump and dump.
Yeah, that's
so this is pump and dump. So,
that thing was up. That thing was up 1,200% today.
Yeah, that's what I'm saying. Like this classic. Can you see my screen?
Oh yeah, damn, you had it right in front of me. I was looking at my screen.
I was like, what?
Yeah.
I was like, what are you looking at?
Yeah. So Marcus, this is something I would not touch. I don't. So its market cap is 207 million. That's a small cap, and some people might even say it's a micro cap.
Oh my gosh! Look at this thing. This thing flatline.
Yeah, and that's only $207 million company now after it's jumped 1,200%. So yesterday, this company was worth. I mean, it was probably maybe like I don't know, tens of millions of dollars. So this is a tiny company. I wouldn't even look at it. It was a penny stock yesterday. Today it's not. Not something I would do. It's way too small, way too volatile, way too risky. And the energy space is down like 40-50% the last 2 or 3 years. It's just a terrible industry to be in. So no, I wouldn't touch this one.
Yeah, and I'll say, looking at the 5-year chart, which is what I always go to, if I can, they start flatlining way before COVID. And I mean flatlining. Like if you look at this is a flatline. So for that reason, if any news came out, when a stock is trading, especially when a penny stock is trading, you can have insider trading that can inflate the price. And then all of a sudden, just the whole bandwagon effect kicks in and people just jump on because it seems like they're going to ride this wave. It is no way, and I'm going to say this, that it's going to sustain a 1,200% increase on an ongoing basis. Is people are going to short this stock. Yeah. And not only are they going to short the stock, profit taking is going to be probably off the chains, and unless something they had to hit like some kind of goal, or I would do more research. I got to see. I'm just curious now why I would do this, but this can be set up very easily for a pump and dump. And for anybody who's watching, who's like, what's a pump and dump? A pump and dump is when a company has a really small volume of shares traded. So anytime new money comes in, like institutional type money, or a very rich person, doesn't have to be, it can just be an accredited investor, and they just do an influx of investing in, or insiders start driving up the news around the company, and in that particular industry or area, it takes fire, but then it spreads. They drive up the price, and then they dump the stock, leaving most of the people who are out of the know holding the bag. Because if this thing goes up $12.95 today, which it was trading at like $1 yesterday.
Yeah.
So somebody just got rich, and more than likely they're going to make a run for it before SEC comes to look to see why this happened. And not to say anything's wrong with foreign countries, I mean foreign investments, but their headquarters is based in Hong Kong. And when you don't know what that governmental influence is on the stock, you are one of the people that gets put out of the know. And for really Asian markets, they have really large swings historically for some of their penny stocks.
And I'm just looking up some numbers on it now. It only has 645,000 shares outstanding.
Yeah.
So I mean, today it traded.
Yeah, I want to see the volume spike actually.
Well, it's saying even after hours, it's traded 10.8 million shares. So this thing is being churned. If it only has 600,000, 700,000 shares outstanding, but it's trading 10 million shares, man, yeah. So these are complete red flags when companies trade one or up 1,000% in one day, and two, you're turning over.
No, like 200% in one day is like something.
Yeah, right, yeah. 1,200 is just I mean, yeah, and then it's turning over its share count multiple times, and this is just. I mean, some news came out, people jumped in, made some money, and they're gonna run. I mean, this thing will be back down to $1 probably in the next days or weeks.
I would guess it'd be a cents. And truthfully, this is one of those things where I would watch out for money laundering. But this is me. I'm not saying I'm not nothing to SPI Energy Co, but I would look out for it. So it's
Well, 1,200% gain is that. I mean, that's just not that sounds like a classic pump and dump. Yeah.
But if you in it, it's a beautiful thing.
Yeah. But I personally wouldn't get in it now after being up.
Well, I don't know. I mean, again, there's always it depends on how you trade it, right? So we're gonna go down a road that I wouldn't want to go through publicly, but Marcus, if you want to hit us up on a DM, we can talk about it. But it's strategies you can put around something like this. I just don't. I know it's not going to keep going up. I promise that. No, I don't promise it, but it's highly unlikely.
Highly unlikely. Yeah.
Gotta watch myself, right? Self-regulation.
Yeah, right.
But no, thanks for the question, Marcus. I mean, stuff like this is actually fun to look at because the average person's never seen this, right? And it's probably people watching right now who are like, I don't know. That's it looks pretty interesting to me.
Yeah.
Even if a company like this runs back up, because their 52-week high is like $46. There's a reason it went down that precipitously. And the emotion of investing, this is a great conversation about emotional investing. This is what leads people, it triggers greed. And you start to have that thought, like, I don't want to get left out if it goes back up to $46 a share. Sometimes it's not worth the risk. So if it goes up to $46 a share, I'm not willing to put money into it to see if it happens. Now, if I had curious money, and that means like money I honestly was about to go to the casino with.
Right.
And go to the casino knowing I'm gonna lose, not even going to the casino hoping I was gonna win. Like I didn't care at all money. I would put $200 just to say I did it.
Right. I mean, the range of the stock, the low is 55 cents.
Yeah.
The high is $46. That is a ridiculous range for a stock. And again, that's another red flag. That shows you how ridiculously volatile this stock is. So, like I said, for me, I wouldn't. I mean, like Brent said, there are ways to play it with curious money, which is even worse, which is even lower on the total pole than risk money.
Yeah.
It's something you do, but as a general investment, now I wouldn't touch anything like this.
Yeah, everybody watching this, I wouldn't touch this stock either. And unless you truly understand strategies and you understand the strategy you're about to implement, which I have an idea of a strategy you can use, but again, Marcus, contact us directly. We'll talk about it. I know you put a lot of good stuff inside the Investing Education Academy group on Facebook. So this is kind of cool that you point this out because it's a good thing to talk about.
Mm-hmm.
All right. So with that being said, everybody, we appreciate the questions. And as you can see, when we can, we jump right in because no one's really doing this real time, or they're trying to charge an arm and a leg. And it's not giving the retail investor an understanding of like what anomalies look like in the stock market. And this is it. You couldn't pick a better anomaly than this.
Right.
So it's easily manipulatable. It's not trading a high volume of shares. The price swings are just astronomical, and it's in a foreign country. That's like all the makings of just market manipulation that you can stir up, possibly.
Right. Right.
So yeah. With that being said, thank you. We will see you all next Wednesday, 9 o'clock, and we will have a thought-provoking conversation again. For those of you all who are now interested in becoming members of Investment Education Academy, you can go to www.ieamembers.com. There are 3 different platforms you can choose from, whichever one makes the most sense for you. We're growing. We had 81% membership growth in August. We've continued to see that sales growth in September. And we just got the confirmation. We made the announcement that Amazon contacted us to get our podcast put on their platform. That was conjecture until 2 days ago. So we are officially now airing on Amazon's music and podcast platform, which is extremely cool because they found us and asked us to be on their platform because of you all, because of the content. And it's we're growing. IA is growing, and it's because of the commitment that you all have shown to the organization and Leon and I. So
Yep.
if you have anything that you need us to talk about, our goal is really to lessen this wealth gap, and that's what we're committed to. And we're talking about so many companies, getting over. It's funny. We talked about having over 1,000% rate of return on Amazon in 5 years. This company had it today.
Yeah, right. I mean, more than about 1,200% return in one day. I mean, yeah. So good. Hey, that Marcus, that was a good call though.
I'm really glad you put it up. But for anybody looking to join the community, we're having much deeper conversations inside of it for things like this. Talking about strategies for how you buy Tesla, and it's information that's going to help change how Black wealth and wealth in general happens in our ecosystem. We can say that we're putting out as much as we can to provide you all with opportunities to learn about other ways to have your money work for you versus just a savings account.
Yep.
So we'll see you all next week, and thank you for your time.